It would be great to have someone who could do our work for us, right? Someone to prevent us from making mistakes. Someone to assist with our routine professionally and allow us to devote our time to communicating with our closest people. If only we could get results without wasting our time for nothing. Unfortunately, it's impossible in real life. But wait, Liteforex social trading. Spend your time doing what really matters to you.
Hi guys, good afternoon, 11th of July 2019, it's 2 p.m. CET, 1 p.m. London or 8 a.m. Eastern. Piotr here, and this is the New York Open live market coverage here on Liteforex global YouTube channel. We are going to start with risk warning. Guys, please bear in mind trading effects on margin carries a high level of risk, may not be suitable for investors who can sustain a loss of some or initial investment. So please do not risk the money you cannot afford to lose. Seek education, gain experience before risking real money. However, past performance doesn't guarantee future results. Good afternoon, Mer. Hi, how you doing? Hopefully everything is all right. Okay, so what happened? Plenty of things happened since yesterday. We had a Powell. So after we saw his text, dollar weakened a bit. We had a bond auction, we had a Fed minutes, then we had weakened dollar over the course of Tokyo session, and we have the continuation here as well. Now, the most important thing today is Powell again, but within the next 27 minutes, US CPI. So it's going to be or not to be. Oh, not good with pound, Mer. But anyway, we are going to discuss pound as well. We are going to connect with Michał within the next few minutes. Actually, we are going to connect with him twice. Just trying to make all these things in order. So, we just had ECB minutes half an hour ago. That's what I'm going to briefly discuss with Michał in a second. We are waiting or awaiting US CPI, and that's gonna be the first thing today, and the second at I'm sorry, yeah, and the second thing is gonna be another Michael. It could be Michael Mer. Yeah, and we have again Powell. Most probably, he's not gonna change his mind. But I do remember there is only one thing. I'm a little bit worried, because as far as I remember, Powell was very dovish some time ago. Was so dovish some time ago, and next day or so he get very bullish US data. So now my question is, if you remember what I'm talking about, it was in relation to yeah, there was some CPI probably as well. Anyway, so if you remember that thing, so now you got my point. What I'm worried about, meaning that he was complaining about the low inflation yesterday, and we are awaiting CPI today. So yeah, I'm not gonna be surprised if we are gonna to get the higher reading, right? That's the first thing. We are going to discuss the dollar also from that Powell perspective and other Fed speakers. There are plenty of them later today. We hit on the dollar some critical levels. I would say it's a little bit overdone, in my opinion, but just a little bit overdone. Because what I understand right now, my way of understanding here is that market is trying to price in 50 basis points, right? I'm not so sure, guys. I'm far away from this 50 basis points. Well, one of the reasons is still US data, right? It's not ugly, right? We don't have bad numbers. That's the first thing. And the second thing, the biggest dove, or almost biggest dove, Bullard, last time when he moved dollar, he said that, okay, maybe his 50 basis points was overdone. He's okay with 25. So there are plenty of details, and market is trying to show us a little bit different story here. Well, that's gonna be very, very interesting. As you can see, I'm going to discuss with Michał as well, but as you can see, I'm sitting long euro dollar based on what we discussed this morning, and one can argue, wow, Piotr, it's almost to the point, but it's the same strategy. It is almost to the pip, but it was the same strategy we used yesterday, and we've been, during the first time, we've been stopped out on the pound, right? So that's how it happens sometimes. The strategy is not going to work. Today, I already cut half, working fine. We are approaching another supply. We are awaiting data. I'm fine with this +1. Either it's gonna be 113 or 113.50, or we are going to be stopped at profit with remaining half at +1. Hi, good afternoon, Siamus. How you doing? Hopefully everything is all right. Okay, so let's try to connect. In other words, the pound is stronger, right? The pound broke higher. One of the reasons might be. I think the Carney sounds a little bit hawkish. So that might be one of the reasons. But we are testing very interesting levels. We are going to discuss right ahead of the CPI data. Okay. Thank you very much. Thank you for a kind word. So yeah, what we are going to do, just not to be disturbing, but the existing position. So as usual, what I'm gonna do, I'm gonna to hide the position. So we can work during this New York session. During the New York session, we can work not being disturbing, but by existing position. Anyway, dollar yen also trying to recover. So, you know, the most important thing, in my opinion, is going to be where we are at the end of the day. Because right now it looks like there is a breakdown on the dollar index. Especially that we are below important pre-non-farm payrolls levels. The only thing I missed in this whole puzzle is the indices. I think Powell was trying to scare the market yesterday because the usual stuff, a little bit too high. Of course, there is no discussion with market, but especially with DJ and with Nasdaq, we are doing the things we were discussing. So it's gonna be where we are at the end of the day. Of course, we are going to discuss over the course of the day. Yes, Mer, thank you. That's what we are going to discuss with Michael. Yes, you're right. So plenty of things around during the over the course of the day, and the most important thing, where we are at the end of the day today. Is it going to be the breakdown on the dollar, or is just shadow and we are going to back on track later on during the day? So let's try to connect with Michał, so please give us a few seconds. Okay. Hi, Michał. How are you doing?
Hi, hello.
Keep smiling.
Good, I'm fine.
It's great. It's a great day. Keep smiling.
Yeah. like always on the market are great days. There are no bad days.
Oh, just sometimes. Just sometimes. All right. Because we are awaiting the US data within the next 15, 17 minutes or so. Just briefly, all right?
Hi, Mer.
Just
Hope
briefly.
you too.
Just briefly about ECB. Your thoughts. What do you think? Are we going to get the? Is it possible we are going to get the cut next meeting?
I think yes. After all the testimony and the dovish comments, I think there will be at least at 25 basis points, and we should also pay attention to the CPI because from what I've read that the Fed pay attention very closely to the CPI because it's less volatile than the inflation. So I think it will be very, as you said before, that they are very paying close attention to this data. So I think it will be very like the core data to look for, and then to how big it will be the reading. So that I think it will have also the impact for the decision. But I think at least those 15 or 25 basis points they will cut the rate. I think it's like more not sure. There is never 100% sure. But after all these comments, I think it will be those preventive measures been taken.
Okay. I got your point, especially if we are going to take into the consideration all this ugly European data like PMI's numbers. So that might be the case. Then the very low inflation looks like it's what was trying to point out Powell yesterday during his testimony. He mentioned as well about the low inflation all around the world. Maybe he didn't mention the Venezuela, but that's the only country. Anyway, what's your takeaway after yesterday Powell testimony, and what do you think? Is he going to I don't know. For sure, he's going to repeat most of the things. But what's your takeaway from yesterday?
My takeaway from yesterday, I think but I think he also watches the data, and but I think there will be like talk, nothing special. I was thinking that also yesterday, but you were more right that there have to be some like strong comments about the monetary policy. But today I think it will be more like no, not banana attack, but very easy comments. Not I think he will not add anything that the market could change his mind about the rate cut. He was very clear about that.
All right. So what do you think? What do you think when he was if he knew yesterday about today's CPI number? Because I remember some time ago he was complaining about the data that the upcoming data might be weak. Then next day and the second day after, we got very good US numbers. I'm going to laugh. I'm going to laugh if we are going to get strong CPI number today. What do you think?
Because he said, okay, yeah, I think that yeah, you may be also right at this one. Very often they are playing around. I think it's like the puppeteers are showing up on the market, and this is one of the best examples of that.
Yeah. Okay.
That they want to just the big guys. Okay, maybe we will talk more about the euro, the ECB minutes.
Okay.
Because from what I saw, take a second. Yeah, the euro is getting stronger and stronger.
Yeah, we are
in the short term.
Yeah, we are about to hit the supply right now.
Very okay. So about the eurozone, I think they like the Fed is not only the central bank that wants to take the preventive measures. I think that eurozone have the even more sorry, forgot the word. They have more like the reasons to also active in this way, in that way. They are as I think that many people, many traders have read that they want to cut the rates and also restart the QE, quantitative easing. And one of the reasons I think that, for example, they also lowered the estimates for the eurozone growth. That it's from the 2018, the growth was 1.9%. Forecast for this year is 1.2, and they cut the future from 2020 from 1.5 to 1.4. So I guess they also will be. I will not be surprised when they will cut the rates on the next meeting. Already, I think it will be. I think they will. They gave the strong comments, like the many of the board members agreed to take this stance. They should be. They should. Put strong emphasis on this and take the measures to to extend the monetary policy, to restart the QE and lower the rate. So I think it will be no. And also they saw that the target of the inflation they're missing. The inflation is lower than expected, and so I think that this is also for the central banks, as we said before, the CPI and the inflation is the data that they paying close attention during the decisions about the rate cuts. So I guess they will try. At the end of the day, neither the euro, neither the dollar are weak currencies. I think it's because of the central banks that wants to weaken the currencies, and that's why we are on this consolidation between 1.12 and 1.13.
That could be the case. You're right. That could be the case. But I would say when we are talking about the game, I would say it's a game between Draghi and Trump, not Draghi and the Fed.
That's right.
So right now I think Draghi is winning 1-0 because dollar is stronger and it's not what Trump is looking for. Anyway, Michael, thank you. Michał, thank you very much. We are going to have one more connection during the second part ahead of the Powell speech. All right?
Yes. Thank you for having me.
Thank you very much.
Sorry for the bell.
Thank you. No worries. It's okay.
I don't know if you heard that.
See you in the next hour.
Yes. Okay. Thank you. Bye. Till next time. See you later.
Okay, so let's have a look what we have ahead of the CPI number. Hi Renko, how are you doing? If there are going to be the chance to do something, we are going to do something, no worries. But it's tough to trade 9 minutes ahead of the CPI. So where we are, let's have a look what we have here. That's the range from the 4th of July. We do remember that there was a bank holiday in US, so it was a very tight range, 2 upper shadows, so we know where the liquidity eventually is. We are testing right now, we are testing top of the range from the 5th of July right now. So overall, it's also the base when we saw the huge breakout 21st of June, right? So it's some natural supply level, and I'm not surprised that the bulls got a little bit of the problem here. So we had a little bit of the consolidation. We had a aggressive pullback by few pips after the ECB minutes, trying to hold pre-non-farm payrolls levels. That's what we discussed this morning, right? So overall, it works fine right now, but the real problem arises here, 12.85, 13. But to be honest with you, there is, there are market forces, and if we do expect something similar what we get from Powell yesterday, plus if we are going to get the weak CPI, we might push. And then I think much more important is what we discussed before, this 1350 zone, all right, where we can create this over under eventually trade, taking into the consideration also again the zone from the 20th of March. If you remember, we were talking about this few times, especially when we were here, when we broke higher. So it looks like it's still the bottom of this of that day of 20th of March is playing the huge role. Now it still would be from here around 60-70 pips, so that's not gonna be something unusual eventually to hit the level over there. Now the question is if it's going to be strong, I don't know, first part of the New York session strong rally, and then rejection, upper shadow on the daily, and then tomorrow we will get back towards the weekly open around 12:20, right? Blue dotted line represents weekly open here. Very interesting. We'll see. Now switch to the hourly chart. Plenty of possible supply in that zone with liquidity pool above 13.15 in my opinion. Just my 2 cents here. One more thing, when I was trying to compare to the previous euro dollar rally, let's have a look the biggest pullback, and we were discussing this morning. So still there is a possibility we are going to see lower levels. Now that's why I cut half and move stop to +1, right? Because if we are going to react inside 12.85-13 level and we are going to see the pullback over the course of the day, we might retest 12.40, right? The next zone we discussed this morning. And that might be another buying opportunity, right? The thing is that in that case, this type of the move may encourage the bears we saw after the payrolls, right? So in that case, that's gonna be the challenge for bulls to try to push through 12.65 again. That's gonna be line in the sand, in my opinion here, right? So I think that much safer way is to try to hold 12.60. So we might to try to look. I'm going to switch to 15-minute chart. We might have some kind of the jumper over here, trying to connect today's London lows, right? So we might have some kind of the jumper, and the bottom of this consolidation pre-non-farm payrolls levels, right? Before we broke lower. So we might from here test, for example, like this. So we are about to consume the supply. We are here, pull back and trying to attack 13.15 level. That's how I see the things on euro dollar. The thing is that the pound looks interesting, and we started a little bit of the correction on euro pound. So in case we are going to continue that, let's have a look. Euro pound. As you can see, we started it looks like it might be something bigger, especially that ahead of the New York Open, we retest the broken level and we are trying to continue to the downside, right? We are about to test another possible demand, so we are trapped right now. But in case of the continuation to the downside here on euro pound, right, it might be, in case of higher levels on the euro dollar, the pound USD may rise much faster here, right? May rise much faster here. So, but with pound, there is a one danger thing, in my opinion. I'm talking about over the course of this bounce. I'm talking about the biggest pullback was probably here. Yeah, that was the biggest pullback. And so in case we are going to hold this swing high, we might see retest of the Monday high closer to the weekly open. So any kind of the spike down to the pound is still possible, right? Now, I'm not saying we already changed the direction on the pound, right? That's what I've mentioned this morning as well. Look, let's check two latest falling waves, right? So the one is here. What I'm taking into the consideration, the latest rising candle and broke through, right? Few levels. So, and that one, right? So taking into the consideration both, I'm not a huge fan of the Fibonacci, but that's what my colleague pointed out earlier today. So I think it's worth to check. From the latest wave, we are testing 78.88 zone right now, which also works with this low range day, 4th of July. So that's supply base break down, right? But it's nice because if we are going to take, if we are going to make the measure of the last two waves, we are about 42.50, right? So it might be that we will see at least attempt to renew, put the pressure on the pound. But again, Carney today wasn't dovish. Carney today wasn't dovish. All right, guys, there you go. There you go. Looks like, at least after the move, looks like data surprised Powell again. Someone said something about the inflation, right? Initial claims 209 versus 223 expectation, so 2009 versus 2023 expectation, prior 2021, strong weekly jobless claims, CPI 1.6 year, prior 1.8, core 2.1 versus 2.0, expectations prior, real weekly wages 0.2 versus 0.1. Boom! Mr. Powell! And yeah, they did it again. Oh, oh my. So, anyone? Still 50 basis point cut? Guys, we were talking about that. We were talking about that. Poor Powell. Of course, it's but I don't know. I thought that he knows the data. It looks like no. Well, let me check again. Month to month 0.1, estimation 0. Well, nothing to add. So now it's gonna be very important stock reaction, because we saw the rally because of the expectation of the cut. Okay. What now? What now? Let me place into the chat the data. So we are about to look to buy dollar, right? It's good that I moved the stop. So we are still trying to fight around these pre-non-farm payrolls levels. I've got a little bit different here because weekly earnings 0.2, previous revised 0.2. So it's positive data for dollar, as we can see. So what I would like to see right now, where we are going to get the early close. That's gonna be key here. And don't forget, we do have plenty of Fed speakers, not only Powell. We do have Williams, Quarles, Bostich, Barkin, Kashkari. Kashkari Dove as well. So it's gonna be very interesting from that perspective. So let's have a look what we have and where we are. So based on daily chart, we got this rejection of the 5th of July high. That's possible supply, so looks like it's working, right? We are about to try to hold levels related to pre-non-farm payrolls number. That's what we discussed this morning. At least for now, looks like it's working. How long? I have no idea, because it might be that market is gonna be disappointed because of the Powell. Sometimes it's not the first time, right? And we got something different. So again, it's at the end of the day, it's gonna be all about expectations about the cut. And I've been talking about this, that if because in my opinion, and it's easy to check if you are going to go to archive section on the Liteforex YouTube channel and you are going to listen our previous meetings. I've been saying that I can't see the reason why we should see the cut by 25 basis, not saying about 50, right? And yesterday after the Powell, the expectations in regards to the upcoming Fed meeting about the 50 basis point kind of cut expectations were around 30%. I'm going to try to check where we are now with those expectations. Anyway, we are approaching first break. You know, we got the data against the last 48 hours market move, right? So I have to see where we are at the end of at the top of the hour. So I'm not gonna chase the market here, all right? There is no reason to try to chase the market here. Looks like pound might be the winner here, and especially that's what we discussed in relation to the euro pound. And I'm very curious what we are going to see. When the New York cash open within the next 50 minutes, right? So that's gonna be interesting. With Powell again 30 minutes later. So guys, what do you think? Gold is about to test mid-range again. That's gonna be interesting, really. And then we have the London fix, and also wonder what we are going to get around the fixing. Hi, Pavel. Siamus, please check if you are here still. Let me find the link for you. I recorded yesterday, and it looks like they are playing the scenario I've been talking about. Give me a second. I will provide the link about the Bitcoin. Just a second. And this is the crypto. Oh, Michał sent you already, but here we go. Thank you, Michał. Thank you very much. But anyway, it's available here in regards to Bitcoin. We have to hold some levels. All right, guys. It's time to make the first break. Exactly, Pavel. That's what I've mentioned as well. That depends, because it's we are in the middle of something else in terms of the market move compared to what we get from US inflation data. So I want to see where we are at the top of the hour, because as you mentioned, Pavel, it might be that completely after yesterday Powell, we've changed the sentiment and data doesn't matter anymore. Simply we are going to either, we can call it profit taking, big profit taking from dollar long, or just we can take it as a completely changing the direction. So let's have a look. Let's have a look what we have at the top of the hour. So bar is open, coffee, tea, whatever you like. Charts are visible. I'll be back at the top of the hour. Enjoy the break.
It would be great to have someone who could do our work for us, right? Someone to prevent us from making mistakes. Someone to assist with our routine professionally and allow us to devote our time to communicating with our closest people. If only we could get results without wasting our time for nothing. Unfortunately, it's impossible in real life. But wait, Liteforex social trading. Spend your time doing what really matters to you.
All right, guys. That's gonna be challenge. Anyway, let's get back to the beginning. So let's have a look what we have here. I'm talking about dollar index, and we have to switch to weekly chart. I didn't cancel anything right now. We were discussing last week, we got back above the trend line. That's positive, and that might create the opportunity to hunt for stops higher towards 99.50, right? We were discussing that we might see pullback and retest of the trend line. That's what we have right now, so let's switch to daily. Now we are a little bit below this trend line, but, and that's the big but here. On the dollar index, we are still around pre-non-farm payrolls levels, while euro dollar is above the toughest inside the dollar basket is above, right? So something is wrong, and the thing is that also Powell pointed that out. That's the very good question, Mer. We are going to discuss that in a second. At least we will try, because you know it's. Let's get back to Powell. Powell mentioned that it might be based on the reaction we've seen after strong CPI. I mean, okay, it wasn't ultra hawkish CPI, but anyway, it was better than what market expected, right? But looks, we just algo only reacted, but overall, from the hourly perspective, so let's switch to 1 hour here on dollar index. We just hit around non-farm payrolls levels and still holding around when we are talking about the last Friday price action. But maybe what Powell said, the upcoming data, it's not gonna be that important if the overall sentiment, dollar sentiment, has changed. Okay? Now, let's get back to our platform, to euro dollar, and I'm going to try to explain you my way of thinking. Give me 1 second. So let's have a look what we have here. That's the euro dollar. Now, guys, let's make it that way. And please tell me at the end if you agree with me or if it's something out of, I don't know what, but yeah, if you think that I'm completely losing my mind, just tell me. But first, let me do two things and let me explain what I'm talking about. And correct me if I'm wrong. The next FOMC meeting is about 3 weeks from now. Am I right? As far as I remember. Let me have a look. Let me check. 2 or 3? 3 or 2. Yeah, there you go. 31st of July. 31st of July. 3 weeks. A little bit less than 3 weeks. But that's what I've been thinking about. We all agree, taking into the consideration everything here, right? Dollar was strong. Now, last two important events. The one here, not bad non-farm payrolls. It wasn't great, but it wasn't bad. So let's buy dollar, right? Let's buy dollar. So that's important level. That's where we saw the latest dollar strength. Yesterday event, Mr. Powell in action. We got back and retest pre-non-farm payrolls levels. There was a little bit sell-off or intraday profit taking into the end of the New York session, into the end of the day. But what is important for me right now? Asian guys, that's not usual stuff. Asian guys decided to sell the dollar. Then late Asia, beginning of London, beginning of New York. What do we have? Try to think. We were discussing a few times this stuff. I'm not sure if it's going to be valid at the end of the day. That's gonna be my summary. That the important thing, where we are going to be today and tomorrow at the end of the week. So try to follow me for a second. So Asia took out pre-non-farm payrolls levels. Very important level. Then late Asia test, London test, ECB minutes test, US CPI test, and we are still above. Let's make one simple measure without the shadows to the downside. Sorry. It's just 65 pips. But 65 pips from here, okay, is giving us what I've been talking about. I don't think we are going to stop here. At least we are going to make 65 pips higher, and here is next supply. So we do have some kind of the liquidity pool, so we may try to hit some stops and see the bigger pullback, right? But if we are going to stay above this very important level over the course of the day today and tomorrow, I'm about to agree with Powell that the overall dollar sentiment short term has changed. In that case, what is the next significant, because we are right now, what we do, we got another strong data. US strong data, and we cannot get back, at least for now, below pre-non-farm payrolls levels. What I'm talking about, the next important event, trying to take into the consideration payrolls, trying to take into the consideration Powell and today's CPI data, where we are lower on dollar. What I'm talking about, that if we are going to hold above this level right now, today, tomorrow, we might see overall slightly weakened dollar towards FOMC, meaning that for the next 2.5 weeks we might see weaker dollar. So meaning that even if we are going to get good US data, not super duper data, but overall not bad data, any kind of the pullback on euro dollar might be used as a buying opportunity in that case. Hopefully you got my point. Going by important events. What is important thing from euro dollar perspective right now? To hold current levels towards the weekly close. You got my point? Hopefully. Now, Mary's asking if USD is strong or other banks are very dovish. I would say that that's yeah. There is a chance when you have weaker currency that finally, taking into the consideration G7, right? I'm not talking about other countries, but let's talk about G7, where the main problem is the low inflation. So having a lower valuation of the national currency, yeah, we might import the inflation, right? That's the danger game. That's the danger game. A little bit different way of thinking is by Mr. President Trump. Because if he is saying that everything is fine and he is playing his election game with the great America again, you know, I would believe this is true, but only in case that he's not complaining about the strong dollar. Because you cannot have great economy without the strong currency. That's my way of thinking. So it's a like a central banking game versus President Trump, right? Overall, the central bankers are better off right now because dollar is still strong. We are about to lose some strength here. Probably, so then we will see. But again, just to be perfectly clear, I'm not expecting dollar is gonna to lose the ground versus euro towards 120 ahead of the FOMC. I'm not expecting Armageddon. What I'm talking about that we might see slightly weakened dollar towards the next FOMC if we are going to fade dollar rally after the good US data, right? That's what we have right now. We got really good data and dollar cannot get back above important levels. In case of euro dollar, below important levels. So that's how I see that. That's how I see the things. The same is here with dollar yen, and we were very detailed discuss this morning during the pre-London open session. Because if we are going to take the daily into consideration, we are about to break the trend line. But we were discussing there is a whole day, everything can happen, right? And we were discussing this at 8 a.m. CET, and 6 hours later, it looks like bulls are trying to get back into the game because of better data, right? So, yeah, they already moved 55 pips back. So the thing is to get back above the Monday low and weekly open, right? That's what we discussed, that from intraday perspective, that might be still selling opportunity. So if there are gonna be one-to-one correction after the whole move to the downside, it's gonna be perfect retest of the broken trend line and the weekly open, especially that we have some kind of the supply possible here. Okay, taking into the consideration that that was, oh gee, that was the place from where we took out this low, from where we went to the higher high, right? From intraday perspective. So that's significant level around the weekly open. So yes, if we are going to revisit these levels above 35, 108.35, I'm going to switch to smaller time frame and I'm going to look for any sign of rejection, right? Now, if I consider dollar yen long, we were talking why we might bounce from this level, because there, and we were discussing this morning, because of where we saw the latest weakness, right? From here we took out the previous low, right? From here. So okay, great, that's what happened. Okay, but I think that we have nice liquidity pool, and the real weakness was here when we are talking about the beginning of this trend line, which is visible also here on a intraday chart, because if we are going to connect first 2 points, then we have this line as well from the intraday perspective here. All right, so I think that we are going to treat yesterday move and today's Tokyo move as a one wave. And the second wave, we are going at least retest 107.50, 107.30, right? After failure around weekly open. And surprise, surprise, as you can see, equal waves are possible. Okay? So hopefully that's clear. Hopefully that's clear, right? My way of thinking. So overall, right now, it's all about where we are going to be at the end of the day, right? We are trying to get back right now here on euro dollar. But it might be the case we were discussing earlier, talking about the smaller time frame, that if we are going to give up, then 12.40 might be the case as well. And don't forget, we have Powell again, and my way of thinking is someone, because he's going to testify today as well, right? He's testifying, yeah. Powell testifies. So my way of thinking, if someone is going to ask about today's data and what does he think about that. Okay. So in that case, what we have here, so we are trying to test the bottom of this pre-non-farm payrolls levels, right? And yeah, let's have a look what it's going to be. Still, we've got the possible demand based on We still got the possible demand based on daily open, right? And don't forget, we were discussing yesterday close as next possible demand, as well as we have something around the Monday high, right? So based on the daily chart, that's gonna be nothing else than lower shadow. No, it's not. Yeah, if we are going to break and retest 1240, so it's gonna be a little bit below daily open. So trying to visualize daily candle, that's what I like to do very much. Trying to visualize daily candle, it's gonna be, looks like this. So that's gonna be we are about to test daily open, right? So if we are going to go lower to test this level around 1240, and then we will end the day higher, closer to the high of the day, we are going to have this type of the candle, right? Rising one, so green. All right, so let's switch to daily for a second, and you are going to get my point, right? So retest of the Monday high, gonna build the lower shadow, right? And that depends where we are going to get the daily close. Okay? So 7 minutes left, and we are going to get US cash open. I'm very interesting what we are going to get in terms of the US stocks move. Yeah, that's how they work. That's how they work. Yeah, you're right, Mer. To find the liquidity, to trap few guys to the upside, to trap few guys to the downside, and that's the name of the game. That's the name of the game. All right. So let's have a look what we have on indices. We are going to watch DJ, and we have to have this zone somewhere here, because what we are trying to do, just shy of the previous high, right? So if we are going to fail here, and especially if we are going to fail and move below this week low, that might be a little bit of strategy for bulls. I'm not saying it's going to happen. I'm saying that if it's happened, that might be, again, not Armageddon, but more weakness to come. So where we are from this daily perspective, right? Upper shadow yesterday. So it was some kind of the rally that's, all right. We are going to have a cut. Let's pump this market, right? So invitation for buyers. Now, again, pre-market is higher, trying to retest yesterday high, where some stops, I truly believe there are some stops, right? So what I'm looking for, I don't buy the reason of the stocks moving higher. So from the intraday perspective, I'm going to look for opportunity to fade Riley. All right. So the first what I want to fade is going to be yesterday high, and eventually we cannot rule it out that we'll try to also clean these stops. So 27,000 based on my chart. So it's going to be all about first 5-minute trading range and trying to read correctly the sentiment for the first part of the New York session, right ahead of the lunch. To the downside, from intraday perspective, the stops are below the low. I'm talking about this pullback. And that's the key here, in my opinion. If you are going to break through that low, then we are about to retest 26,700, right? So let's switch even lower. Let's prepare for first 5-minute trading range. We might try to hit the stops based on this spike to the downside because of the CPI. So in case we are going to hit that, we might see 27.20, 27.25. Okay. I'm trying to figure it out if I can place some trading. That might be the line. So we might try to hit that line to the upside and create something closer to head and shoulders on 1-minute chart. I don't think we are going to fall straight from here. Okay, let's have a look what they are going to cook at the very beginning of the US session here. So US market is open. But if we are going to see move to the downside from the very beginning, I'm not sure. We should clean these highs, pop this pre-CPI high, I think. and then reject. Whoa, 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 whoa. So where are all the buyers from yesterday? In the meantime, 12.55 on euro dollar, 25.50 on cable, 08.25 dollar yen. All right, so maybe they trying to do 1-to-1. So might be. Be careful here, guys. And again, we have to take out this yesterday low here. To think about something a little bit bigger. Let's give them some time. All right, so where we are, there are option expiration. Let's have a look if we have something. All right, dollar yen. $108.40.50, almost 2 billion, but we are a little bit far away. 25 minutes to go. And 1.7 billion, 107.70, 107.80. So looks like we are in the middle of that road. So nothing extraordinary, but still 25 minutes to go. Well, now I'm going to understand why I haven't checked that before. 12.80, 12.90 on euro dollar. 1 billion. So we did it. Nice job. Well done. And something above 1 billion around 12.30. Okay, USA. Cable, nothing extraordinary. Business as usual with cable. So they did it, equal moves. Oh, but it looks like it's not enough for them. Yeah, I would like to see higher levels rejection, then I would eventually join the party. So yesterday was more trades. We were quite active on the pound. Today, right at the open, you saw I've been long euro dollar, and right now looks like the best way is to try to wait and see. Powell option expiration, London fix, plenty of Fed speakers, 30-year bond auction later on. Whoa, 1-to-1 to the downside, and they ready. They ready. Jeez. So look, guys, we were talking about this bigger correction on the pound that we might retest Monday high based on the biggest pullback over the course of this move to the higher levels. That might be for me, but I would prefer after the London fix to do that. I would prefer to do that after the London fix. I'm not sure if we are going to revisit these levels within the next 15 minutes or 20, if I'm going to get into it. But it might be something in between 25.40, 25.20 weekly open. It might be the opportunity for the buyers. But again, if we are going to see the reaction around these levels, we might try to choose different option. It might be the case for stronger pound versus euro, for example, right? Because we just broke another important significant level, right? So it's all about weekly open. So we are weekly open somewhere here. Somewhere here. So in case I'm going to see a little bit of higher levels, I may try to. Why? Because of what we discussed. Because of what we discussed. Based on the daily, based on the weekly. We'll see. Okay. Okay, so from here we are not gonna hit 27.25 because it's a bit lower. So in that case, we're just going to hit 27 probably if we are going to see the rejection. What I mean by the rejection, I want to see, because the levels we have from higher time frames. Just guys, don't forget, don't try to analyze from 1 minute chart. 1 minute chart is for execution only. I want to see the levels on the higher time frame and then trying to prepare execution on a smaller time frame. So my execution would be, let's agree that's gonna be, might be high of the day. So we are, for example, hitting the previous high, pull back, rally above, hitting the stops, and in that case, if we are going to get back below the previous high like this, I might think about the short. Or I might wait for something similar to head and shoulder. And yeah, that's intraday. I'm going to make the measure of the range, break the range. So what we discussed, the levels 26,850, something 70, and then the low we discussed before as a doubling the range, right? So two targets. All right, time is flying today. So we have Powell again today at 4. within next 20 minutes. At the same time, option expiration. So it's time for a second and last break today. Bar is open. Non-alcoholic drinks, coffee, tea, mineral water, whatever you want. Enjoy the break. I'll be back around the top of the hour.
It would be great to have someone who could do our work for us, right? Someone to prevent us from making mistakes. Someone to assist with our routine professionally and allow us to devote our time to communicating with our closest people. If only we could get results without wasting our time for nothing. Unfortunately, it's impossible in real life. But wait, Liteforex social trading. Spend your time doing what really matters to you.
In the last semi-annual monetary policy report, Chairman Powell provided additional clarity.
Hi guys,
on the Fed's plans to
I'm about to
normalize
listen
monetary
Powell
policy,
again. The same we did
including how the size
yesterday.
of the balance
If
sheet
it's
would be
if it's
driven
too
by financial
loudly, if it's too
institutions'
noisy,
demand
just
for
let me know.
services plus a
Here you
buffer.
have a link to the Powell
Since then,
if
the
you
Fed
want
has
to
provided
watch as
additional
well.
information and continued receiving feedback on its monetary policy strategy, tools, and communication, all of which I look forward to.
And
hearing
at the
an
same
update on.
time, I'm going to try to summarize
The U.S. economy is still
our
strong,
afternoon
growing at
meeting.
3.1%
Don't
in the
forget,
first
we
quarter of
do have
2019, according to the Bureau of Economic
pre-London
Analysis.
live market coverage
And
tomorrow,
unemployment rate-
8 a.m.
the unemployment
CT,
rate remains
7
low at
a.m.
3.7%.
7
as of
a.m.
June,
London,
according to the
or
Bureau of
2 a.m.
Statistics.
Eastern.
Wages
So
have
you are more than
continued
welcome to
rising
join
as
me.
well, with average hourly earnings
So
3.1% higher in June.
the beginning
compared to a year
probably
earlier,
gonna be same as
which is the
yesterday.
11th
So I'm
straight
going
month
to a
in which wage
little
growth
bit
exceeded 3%,
move
according to the Bureau of
lower
Labor
with the
Statistics.
sound, and then I'm very curious what we are going to get during the Q&A. Anyway, let's try summarize the day. Let's start with DJ because it's quite important what is going on and where we are right now. Okay, this we hit higher high, right? We hit higher high, so we created around the logical place from higher time frame. That's the key. From higher time frame, we create this stop count false break to the upside. But what I haven't seen yet, we are talking about this big, we are talking about this candle here. I haven't seen after the first pullback that we took out the low. It might be treated as consolidation and make the higher high. So if we are going to hit that, close below, then spike to the upside and then move back below this high, that's gonna be my entry. That's gonna be my entry. So we hit some stops. Would be good to have a close below to retest overall first 5-minute trading range. That's what we have below. Then try to rally and fail above most recent high. That's the plan for DJ. Targeting 26,875 first, 26,815 second. Oh, that's what I've been waiting for. Now we are going probably to test, maybe go deeper into the first 5-minute trading range. Just we have to be patient. Once we are retest the high, would be great to see stop count with rejection. That's what I'm talking about here. Okay, we clear. We clear. That's why I've placed this third line. That's possible that we are going to have something like this. That's why with this small smiley.
Which should include legal businesses that banks disfavor operating in their communities.
All right, that's DJ. And it would be great to see at the very beginning of the second part of the US session after the lunch, you know, another attempt to go higher, boom, failure, rejection, and profit taking towards the end of the day. That would be great stuff. We'll see. Maybe we are going to finish at the new high because of the Powell, who knows?
On a different topic, Facebook announced it's partnering with both financial and non-financial
Dollar yen.
institutions to launch a cryptocurrency.
We are almost there. We are almost there. I'm looking for rejection around 35. That's why I put these question marks over here. We didn't quite make these equal moves yet. There's few pips. I might be, you know, I might miss this by few pips. It might happen. But that's what I'm waiting for a little bit higher levels, maybe even retest of the weekly open. So something in between 35, 42 on dollar yen. Especially, I'm not in rush because I've mentioned a few times, I hate to trade between now and London fix. That's, you know, after the option expiration, but before the London fix. We will see. We will see what we are going to get. But similar strategy like what we discussed with Dow Jones, right? What's gonna be the target? Most recent low as the first one, and the second one 107.50. Guys, hopefully, you know what I'm talking about. In June, we held 3 educational webinars. All of them are recorded and available in archive section on the Liteforex YouTube channel. So, if you want to know more what I'm talking about, just please visit and watch these 3. They are a bit long, but yeah, I think it's worth. Pound is testing the levels we were talking about, but during the second part of the session, I've mentioned I may not take that one between now and London fix, right? So I'm not in rush here as well, okay? But we are testing right now Monday high. Maybe toward London fix we are going to spike down toward weekly open. Maybe, I don't know.
Market is soaring. But most American families get their money from a paycheck, not an account statement from their
I don't know. Looks like,
critical part of your job
compared to what we have,
is measuring and evaluating the economy.
the size of the correction, right? Looks like it's a little bit bigger right now. So be careful out there. Maybe we are going to create this lower shadow. That might be the easier open. You are not in rush. I'm not in rush.
Of their child care and their kids' college and paying off their own student loans, going up and up and up. To those workers, to most Americans, the idea that a stock market rally means more money in their pockets is laughable.
And finally, euro dollar.
The economy hasn't helped most Americans.
We still can have, we are fighting around pre-non-farm payrolls levels. We might see spike lower down towards Monday high. We are talking about the levels closer to 1240, 1235, but then we need to see strong bounce in case of long, right? If we are going to get the close, if we are going to get the close back below pre-non-farm payrolls levels, that's gonna be negative from Euro bulls perspective. The whole discussion we had, right, about the changing the dollar sentiment. But I don't know. That's why I'm listening again, Mr. Powell. So let's watch current price action for a little bit longer.
Decided to rescue the auto industry. We know interest rates are low, yet it's worrying that interest rate sensitive
and here 75.85 I may watch after the London fix euro pound as well. And that's gonna be enough for me watching 5 different things, right?
Should ensure that everyone who contributes to their economy also shares in the wealth that they create. All work has dignity. We need an economy that rewards and honors work, not just wealth. Some of the challenges facing our economy can only be addressed by Congress. Millions of Americans struggle to pay for prescription drugs, which are increasing at 5 times the rate of
inflation.
Yet the White House looks like a retreat for drug company executives.
That's not what we're discussing. You know, it's happened. But that's why I've been afraid about new high because of this consolidation. Now looks like we broke through and never look back.
There are things that you can and should do to help the economy.
But still, I'm sticking to the plan right now.
Monetary policy and doing your job.
Sticking to the plan. at least for now.
Appreciate, Mr. Chairman, your recent recognition that this expansion has the potential to benefit communities that have missed out on prior economic expansions.
No one wants to chase the market because that's the first and most common mistake when we are chasing the prices. So usually we are selling at the bottom and buying at the top.
In previous hearings, I've raised concerns about threats to the financial system, including the Fed step.
Let's stick to the plan. If we are going to go lower, that's the latest weakness we've seen right after the open cash market. So let's have a look what we are going to get here. We should see some bounce from here. That's my way of thinking, at least from the very bottom of the first 5-minute trading range. But then if we are going to bounce from here, we might fight
and has been mismanaged and under-regulated.
We might fight with this supply,
I continue to be
which took out
the Fed and other banking
the
regulators
top of the first 5-minute range.
I add a new worry.
We'll see.
Today to
We
the
will
list of
see.
Private corporations, Facebook in this case, that have gotten carried away with their own wealth and their own power and are now attempting to ape the role of government, creating their own currencies and monetary policy and payment systems. So now, in addition to complex and risky Wall Street banks, we face new
Looks like today it's gonna be same stuff. Also, they are going to ask Powell about the Facebook blockchain project. One of the reasons I think we saw Bitcoin going lower.
The American people, but these private corporations have no duty to the broader economy or consumers. They're motivated by one thing, surely their own bottom line. Allowing big tech companies to take over the payment system or position themselves to influence monetary policy would be a huge mistake and is surely a threat to our democracy. Too many times when the stock market soars and banks make money hand over fist, regulators have been complacent. As we've seen in the past, though, bank profitability is not a reliable indicator of banks' true health. The stock market is not a reliable indicator of the real economy's performance. I hope this is not another example of the Fed taking
probably know that the only way I would like to
Americans from corporations.
The only thing I would like to hear is if anyone is going to ask, trying to point out what's happened today with the data. It happened previously. It happened previously. Because that might put dollar either in a strong position, or it might totally destroy. I mean, from intraday perspective, of course, I'm not talking about the Armageddon.
Before I turn the time over to Chairman Powell for his statement, I want to remind our colleagues that we have a vote at 3 votes at 11 o'clock. We obviously are not going to get through all the questions for all the senators here in that time frame. Senator Brown and I will try to rotate during that and keep the hearing going, but I would like to ask all of our senators to be careful, especially this time, to pay attention to your 5-minute term on your questions so that your colleagues can all have an opportunity to ask questions. With that, Chairman Powell, we look forward to your statement. Please proceed.
So we are going to get the statement right now, nothing new.
Thanks very much.
As Mer said.
Chairman Crapo, Ranking Member Brown, and members of the committee, I am pleased to present the Federal Reserve's semi-annual monetary policy report to Congress.
That's what I heard as well.
Let me start by saying that my colleagues and I strongly support the goals of maximum employment and price stability that Congress has set for monetary policy. We are committed to providing clear explanations about our policies and activities. Congress has given us an important degree of independence so that we can effectively pursue our statutory goals based on objective analysis and data. We appreciate that our independence brings with it an obligation for transparency.
Looks like we are reacting already here. That's not
Today
good
I will review the current economic
from my
situation
perspective,
and outlook before
from my trading
we turn to
plan,
monetary policy.
but no reason
I will
to
also
chase
provide
yet.
an update of our ongoing public review of our framework for setting monetary policy. The economy performed reasonably well over the first half of 2019, and the current expansion is now in its 11th year. However, inflation has been running below the FOMC's symmetric 2% objective, and cross-currents, such as trade tensions and concerns about global growth, have been weighing on economic activity and the outlook. The labor market remains healthy. Job gains averaged 172,000 per month from January through June. This number is lower than the average of 223,000 a month last year, but above the pace needed to provide jobs for new workers entering the labor force. Consequently, the unemployment rate moved down from 3.9% in December to 3.7% in June, close to its lowest level in 50 years. Job openings remain plentiful, and employers are increasingly willing to hire workers with fewer skills and train them. As a result, the benefits of a strong job market have been more widely shared in recent years. Indeed, wage gains have been greater for lower-skilled workers. That said, individuals in some demographic groups and in certain parts of the country continue to face challenges. For example, unemployment rates for African Americans and Hispanics remain well above the rates for whites and Asians. Likewise, the share of the population with a job is higher in urban areas than in rural communities, and this gap has widened.
And we are again in the middle.
A box in the Monetary Policy Report provides a comparison of employment and wage gains over the current expansion for individuals with different levels of education. GDP increased at an annual rate of 3.1%.
Doesn't look bad right now, but again, not my time here. But what I like here is that there was a lower shadow with positive body, so some rush, some traders in rush were trying to buy. Of course, there was invitation, so more stop count. But what is important here, that the previous 15 minutes we closed above the low from the one before. That might be, I'm not saying it will be, might be positive, would be better to close above the low 25.45.
Housing investment and manufacturing output declined in the first quarter,
this lower
and appear
shadow
to have decreased again in the second quarter. After running close to our 2% objective over
because you know I'm already sick of all this reversal of the reversal of the reversal of the reversal, right? We are reversing every few minutes.
Declined earlier this year and stood at 1.5% in May.
I'm
The
sick
12-month
already.
change in core PCE inflation, which excludes food and energy prices and tends to be a better indicator of future inflation, has also come down this year and was 1.6% in May. Our baseline outlook is for economic growth to remain solid, labor markets to stay strong, and inflation to move back.
All right, guys, I think that we
to the committee's 2%
put
objective.
everything in place.
However,
So
uncertainties about the outlook have
I
increased in
think
recent
that
months.
we are
In particular,
prepared for the
economic
second part of the
momentum
US
appears to have
session.
slowed in some
Don't be
major
trapped.
economies, and that weakness could affect the US
If you are
economy.
not feel comfortable,
Moreover, a number of
test it
government
on demo,
policy
test
issues
it
have yet
paper
to be
trading.
resolved,
That's the key.
including trade developments, the federal debt ceiling, and Brexit. And there is a risk that
And
weak
you
inflation
know
will be
what, guys, and
persistent
Mary's
than currently
right,
anticipated.
totally right. Mary's totally
We are
right. You
carefully
know,
monitoring these developments
the
and
best
continue to assess their implications for
position
the U.S. economic outlook and inflation.
trader can
The
have
nation also continues to confront
is to
important
stay as long
long-run
as you can without the
challenges.
position and
Labor force participation
work as a
by
sniper,
those
right?
in their prime working years is now lower in the United States.
You don't
than
have to
most
click every
other
minute.
nations with comparable economies.
You don't
As
have
I
to
mentioned,
click every
there are
minute.
troubling labor
Guys, thank you
disparities
very
across
much. It was
demographic groups
my
and
pleasure as
parts of the
usual to be
country.
here with you. Tomorrow, 8
Relative
a.m.
stagnation
CET,
of
7
lower
a.m.
incomes
London,
and
2
lower
a.m.
upward
Eastern.
mobility for
We are
lower
going
income
to cover
families are also
pre-London Open
concerns.
live here on Liteforex
In addition,
Global YouTube channel.
finding ways to
You are more
boost
than welcome to
productivity
join. That's it
growth,
today. Don't
which
be
leads to
trapped. Be
rising
careful
wages
during
and
the
living
second part of
standards
the
over the long
US
term
session. Just
should
a friendly
remain a high
reminder,
national
plenty of
priority.
Fed speakers around,
And I
plus
remain concerned
30-year
about the
bond
longer-term effects
auction
of
results
rising
from
federal
US.
debt, which
Have
can
a
restrain
great
private
rest of the New York
investment and, in
session
turn,
and see you
reduce
tomorrow.
productivity
Take care,
and
goodbye.
overall economic growth. The longer-run vitality of the U.S. economy would benefit from efforts to address these issues. Against this backdrop, the FOMC maintained the target range for the federal funds rate at tentative evidence that these cross-currents were moderating. The latest data from China and Europe were encouraging, and there were reports of progress in trade negotiations with China. Our continued patient stance seemed appropriate, and the committee saw no strong case for adjusting our policy rate. Since our May meeting, however, these cross-currents have reemerged, creating greater uncertainty. Apparent progress on trade turned to greater uncertainty, and our contacts in business and agriculture report heightened concerns over trade developments. Growth indicators from around the world have disappointed on net, raising concerns that weakness in the global economy will continue to affect the U.S. economy. These concerns may have contributed to the drop in business confidence in some recent surveys and may have started to